So yesterday I ran into a whole lot of articles, right, about the Fed being higher for longer, right, and rate hikes being pushed out, and it's been like really, I got to be honest, like pulling teeth to get most of the economists who come on the show to even entertain the idea that anything other than a soft landing was in the cards, right? Everyone's like, no, soft landing, soft landing. But I got to tell you, my next guest has been worried about this. She's been worried about this for a long time. And after this morning, I got a feeling a lot of the true believers in soft landing might be coming out of that fog. Let's bring in Independent Institute Senior Fellow Judy Shelton. And Judy, I love your note because you say we should be focused on why suddenly everyone is worried about rate hikes and maybe even stagflation, right?
Well, yeah, that's been the concern. I think it was a shock this morning to see that growth appeared to be much lower than had been expected. But I wouldn't call this stagflation. I would call it stimflation, because the growth that we have been seeing, which has been pretty impressive, is really, I think, caused by the fiscal stimulus, the deficit spending of government.
Right.
And to a certain extent, that's kind of artificial. But now, since the Fed's only way to fight the inflation that is caused by the fiscal spending, all they can do is raise rates, I don't think they can get ahead of it.
Right.
So now you have a situation where even as the Fed is raising rates because that's their only response to inflation that just won't keep coming down as they had hoped, they are affecting, for example, mortgage rates. Well, that is a cost of housing and shelter. So that has an inflationary impact. When they increase the cost of borrowing for businesses, but at the same time the government is fueling demand and consumption, not just through the subsidized spending and programs that it's doing to carry out infrastructure projects, but talking about forgiving student loans, all of that puts money in the pockets of consumers and pressure on prices. Well, that higher borrowing cost, the companies will just say that's just another cost of doing business.
Sure.
And that's going to go to the bottom line because now the consumers are going to pay that. So
Right.
That's inflationary. Just the government having to pay higher rates on its own debt increases the deficit and therefore the amount of fiscal stimulus. And then you throw into that the Fed paying banks $280 billion last year to keep money sitting dormant at the Fed in cash depository accounts. Now depositors are wanting a piece of that. So as these higher returns on cash are flowing back into the private sector, you also have people who now say, I wasn't expecting that. So that increases their consumption capabilities.
Right.
So we're fighting against ourselves here between fiscal and monetary.
Yeah, and by the way, within that framework of all the things you talked about, there's one group, though, that continuously gets hammered, and that's like the lower 50% of households in this country because they don't have those assets that make money, right? I mean, and their STEMI checks went away a long time ago. So, okay, higher mortgage rates, borrowing costs, budget deficit, Fed paying billions of dollars, again, to banks not to lend to the people who are suffering the most in this environment. So we've got a conundrum. What happens? I mean, it's the only solution for the federal government to stop spending as much money as they're spending.
I think that's really important, yes, because what we've seen happening is that the government will always pay whatever interest rate it has to get the money to finance its own project.
Right.
And meantime, the high borrowing cost probably is hurting the private sector borrowers. It's just that where we've seen the growth and the reason we thought that, the economy is robust and resilient, when you analyze where the growth was coming from, it was always coming from the government spending.
Right.
And we've seen that kind of model worked in China for a long time, but ultimately failed.
And then when it fails big time. Hey, I've got less than a minute to go. I want to switch gears here for a moment because there's a little scuttlebutt going around because, again, we were going to cut at least 3 times from Jay Powell's perspective. Wall Street said 7.6. And then President Biden started kind of bragging about it, right? Recently, he said, I stand by rate cuts. Like, oh, that was kind of scary. Now I'm reading where there's actually some folks out there, some Democrats who are pushing the president to actually drop the hammer on Jay Powell, to actually talk Jay Powell or force him into rate cuts. We know that's a scary path, but President Biden has mentioned cuts more often than I was kind of surprised that he has mentioned cuts recently.
Well, he did mention it in a speech. He thought, well, that just is going to be such good news to the Fed that they won't have to raise, and they're going to probably end up lowering. We've seen the Fed keep restating that no, we're very resistant to that, and that doesn't play any role in our thinking. But I can't believe that the Fed isn't sensitive to the possibility that if they cut rates, it will be seen as political. Because now they have, well, it's always been the dual mandate,
Sure.
but now you have dueling mandates. Because now the Fed that was looking to cut might be able to say, well, it's not that inflation has come down the way we like, but look, if the economy is going off the cliff, then that would be a reason to support the economy with the cut. But they'll be very reluctant to do that unless they see maybe the second quarter, unless we see April, May, June also keep dropping off and shocking people. And then they might have time to change gears before the July meeting, which is at the very end of the month. And then that gives them the Jackson Hole Conference to try to explain it all.
Yeah, I'm going to steal that, though. Dueling, not dual, man. I love that, the dueling mandate. By the way, Powell set us up for it, right? He kept saying, if we get a surprise in unemployment, I mean, it sounds like 4.1% is Powell's excuse to cut. We'll see. Judy, thank you very much. Always appreciate it.